G'day traders, 1 minute mindset reset. Talking today about most trading mistakes are emotional, not strategy based. If you review and look back at all the success that you've had, it's usually from doing everything right in terms of your tactics, your self management, risk management, profit taking, your entries, exits, all those sorts of things. Most things that damage your account, damage your psychological capital, damage your financial capital, blow out your trading account are usually emotional. If you get into a trade setup too soon, that's not a tactical error, that's an emotional error. If you over leverage into a trade, that isn't a tactical error, that's an emotional error. If you get out too soon because you're afraid of getting stopped out and you want to take a small profit, that's an emotional error, not a tactical error. If you hold on to a loser too long or average into a loser too long or don't use stops, those are emotional errors, not tactical errors. And so, great question from a trader regarding journaling. A lot of journaling that traders do is reviewing their charts and reviewing their entries and exits and looking at where they could have got a better fill and everything else and how they could have got more out of it, where the best trade was and what was moving. But the real progress occurs in your journaling regarding your own emotional arousal states, what type of preparation and process you have in place to manage your emotional psychological state, your mindset. And I talked about, in previous videos, being an observer, a silent observer outside, observing yourself and your thought process and your decision making, recognizing when triggers are coming up that you may be enticed into doing the wrong thing, whether that's getting in too early, taking a trade outside of your plan. Like, I'm very specific in my 1 hour window once I'm in or once that market's set up, because I know with myself that I need to just be in that trade and be done. And as a trader reiterated to me from Friday night, they had a very good day, very good week, and they gave it all back on Friday plus more, which is, a very common thing. Everybody's been there, everybody's done that. If you've been trading long enough and big enough, you know exactly what I'm talking about. So it's important to recognize that most of your errors are behavioral errors, emotional errors, impulsive, irrational. That's where a lot of the real work has to be done, especially in your journaling, looking at, your tactical side of things, but how could you have better prepared going in emotionally so that you didn't do damage, so that you didn't over leverage, so that you didn't chase a move, so that you didn't get out too early, so that you didn't average into a loser, so that you didn't not have a stop loss, so that you didn't just start chasing other markets that were moving. There's a game, we talked about this the other day, that's what will put you into tilt, that's what will blow out your account. If you're an algorithm, the algo just keeps hitting trades. Winners, losers, doesn't matter, it manages the risk. You might have a mean reversion system, a trend following system, a breakout system. So they might just be hitting movement in every direction, and at the end of the day they're green with multiple trades. But if you're doing this from a discretionary perspective, you have to be in charge of managing yourself, the trader. So you have the trader, the risk manager, the trader coach, the office manager, making sure you don't do anything stupid. And number one, manage your emotional, psychological arousal state and mindset heading into the market to make sure you could have the same 2 trades 2 days in a row and trade them completely differently, all because of your emotional arousal state. Work on the things that you can control. You can't control the market, but you can control everything else about yourself. Have a great session today, and may the markets go with you.